I'm going to give you the 7 best investments this year, and some will turn $1,000 into $21,000, and it doesn't require decades of leaving it in there. Of course, there's always the opinion that the economy will go into a recession, but many analysts are saying that the economy will just have slow growth and land in a soft landing. If you're looking into your future, thinking long-term investment, this may be the best time. Whichever way the economy goes, you may have an opportunity to invest, especially if you're thinking long-term for your future. So what are the best investments this year? Well, this list comes from bankrate.com. This list is going to give you some safer picks as well as some higher return growth opportunities. Some of you may be thinking, investing is hard, it's confusing. Well, stay tuned for what I'm about to show you. Investing allows you to reach your financial goals. It can get you out of a financial jam, and it sets you up for a great future. Maybe you just sold your house, or maybe you've come into some money. Investing allows you to let your money work for you. Now, of course, you don't want to tie your money up in an investment and then have to go back in to get that money. You need to be able to put the money away and let it work for you long term. So make sure that you have an adequate emergency fund and that you have paid down debt before you go into investing. This way you won't have to try to go back into that investment, get the money out, instead of letting it sit there and accrue and gain over time. There are so many ways to invest. Whether you're investing in CDs, money market accounts, there's corporate bonds as well as index funds. This is a great thing. Why? Because that means that there's a variety of things that are available that would fit your particular needs. It also means that you can diversify, creating more well-rounded investments, which leads to a safer portfolio. Number 1 is going to be high-yield savings accounts. And you're probably like, that's not a big deal. Getting a little interest rate in a savings account, that's not really gonna give me any money. Actually, high-yield savings accounts are great because they give you a much higher interest than your regular bank, because most of these high-yield savings accounts are through online banks. The good thing about these accounts is that they're readily available and accessible. You may not want your money tied up for a long period of time, whether that's 1 year, 2 years, or even longer. You may want to be able to access that money much quicker. That's where you would use a high-yield savings account. Who is it good for? It's good for the person that needs their cash or may need their cash in the near future. The second person that it's good for, people who are risk averse. They don't want any risk at all. They just want their interest rate. They don't want to have to worry about any volatility. They are risk averse. It is good for that person as well. So let's talk about the risk of getting a high yield savings account. Well, many of these banks that offer the high yield savings account up to 5% are actually insured by the FDIC. This means you won't have to worry about losing your deposits as long as you stay within the federal insurance limits. What are some of the wins with the high yield savings account? The biggest win is the much higher interest rate that you get, because most of these banks are not brick and mortar, they are online only, so they don't have the overhead costs, which means they can pass that on to you as savings through a higher interest rate. Also, a win is you'll have easy access to the money and can likely transfer it over into a checking account or even use the ATM to get the cash out if you needed it. Number 2 is to get a CD or certificates of deposit. You can get a CD at your local bank, and they offer higher interest rates for the most part than savings accounts. CDs do have a limit when it comes to when you can take the money out. So it may be 6 months, 9 months, a year, or even longer. But you get locked in at whatever that interest rate is. So if it's 4% or 5% or 5.5%, you're locked into that rate. Even if interest rates overall fall, you will still get that higher interest rate for your money based on the term that it's in the CD. So who are CDs good for? CDs are good for people who don't need their money immediately. Maybe you are a retiree, or maybe you just have extra income that you want to put away that you don't need access to right now. CDs are also great for risk-averse people because you have a locked-in interest rate guaranteed. Even if overall interest rates fall and go low, you are still locked in to that particular interest rate associated with your CD. The risk is that whenever your term is up, if you've had a CD and the term is only 1 year or it's only 2 years, once that term is up, you get a new CD and you have to get a new CD at whatever that rate is. So if interest rates have fallen, then you would get a CD under that new rate. Now, with rates expected to fall in 2024, it may be safer, according to bankrate.com, to lock your money in a CD that has a higher rate right now so that you can guarantee that rate for a year or 2 years, whether interest rates are falling or not. What are the rewards of a CD? Well, you get those regular interest payments. For one, once your CD matures, whether you have a 9-month CD, a year, or a 2-year CD, once it reaches maturity, you get your original deposit back plus any interest that accrued. Number 3, in terms of best investments, would be dividend stock funds. So dividend stocks are going to give you a cash payout, usually on a quarterly basis. Who are dividend stocks good for? They're going to be more for your intermediate and advanced investors and those who will buy individual stocks. It's better to buy stocks in a fund or a group of stocks. So dividend stocks would be good again for those at an intermediate or an advanced level. Also, dividend stocks are good for investors that are looking to invest for a longer period of time. Now, in terms of risk, dividend stocks are known to be safer than other types of stocks, but you still have to choose them carefully. Going with strong, reputable companies is always the best way to go, but ultimately, consulting with a financial advisor is going to make sure that you're setting yourself up for success and understanding the risks and rewards. Just to talk about some of the rewards when it comes to dividend stocks is that your money is sitting in the stock and is accruing over time, long term, but in the short term, you're still getting those payouts. So you're able to actually get some cash short term, mainly on a quarterly basis. You can get dividend stocks at any broker that deals them through ETFs or mutual funds. ETFs may have a little bit more advantages because they don't have a minimum purchase and typically don't have a commission fee. Mutual funds, on the other hand, may require a minimum purchase and the broker may have a commission fee. Number 4 is going to be value stock funds. Value stock funds have more of a bargain price compared to other stocks in the market. Value stock funds are good for investors who can handle some volatility because you're going to see some ups and downs when it comes to value stock funds. A reward is that many value stocks actually do provide a dividend, so you can get that cash payment periodically, most likely quarterly. You can get value stock funds at any broker, and you can do this through ETFs or through mutual funds. Number 5 is going to be real estate investment trust index funds. Instead of directly investing in real estate, you can invest into these real estate index funds. You can buy into different types of real estate subsectors. It can be lodging, apartments, offices, and many more. And you can do all of this in a single fund. This is actually a good way to diversify your real estate portfolio without having to worry about the different headaches and worries of actual property management. Instead, you have the index fund. Who would these funds be good for? Well, they actually be good for retirees because they do pay out a dividend. So you can get those payments periodically over time, most likely quarterly. Now, this is also a fund that is great long-term. So this is nothing that you would be getting and taking the money out anytime soon. It's something that you're going to let accrue and grow over time, just like many of these investment options. It's all about the long-term gain. In terms of risk, the fund actually takes a lot of risk out because you're able to diversify inside of one single fund. It is good to point out that the price of these funds do fluctuate from time to time, which is why these funds should be best used for the long term. In terms of the rewards, the best thing is that there are dividend cash payouts. Also, over time, these funds can generate 10 to 12% interest annually. You can purchase these funds at any broker that allows you to purchase ETFs or mutual funds. Again, you still want to talk with your financial advisor to pick the best option for you and your financial goals. Number 6 is going to be the S&P 500 index funds. The S&P 500 index fund is based on 500 of the largest American companies. Amazon is one of the most prominent companies that's a part of the S&P 500. Who are these investments good for? Well, if you're someone that wants to receive higher returns, higher than the typical bonds, then this would be something that is good for you to look into. Also, an S&P 500 index fund is an excellent choice for beginner investors. Why is that the case? Well, because it provides a diversified, a broad exposure to the stock markets. This index fund is good for someone who is looking for a diversified way to invest and looking to invest for the long term. The risk associated. The great thing about the S&P 500 index fund is that it is one of the less risky ways to invest. Why is that? Well, because it's made up of the market's top companies. Now, this fund includes stocks, so of course it's going to be more volatile than bonds. However, the index has done very well over long periods of time, averaging about a 10% annual interest rate over 20 and 30 years. When it comes to the rewards, the best reward is the diversification that this index fund offers. 500 companies and 500 of the largest companies. You don't have to worry about one stock, and if something happens to this one stock, all of your investment is in that one stock. No, you have diversified with 500 different companies. This allows you to take part ownership in all 500 of these companies. Not to mention, the fund includes companies of every industry, making it even more resilient than many other forms of investment. And I consider a reward 10% annual returns that this fund is yielding. Of course, these returns are over time, so keeping it in for a year or 2 years, no. This is something that you want to keep in for multiple years for the long term. Where can you purchase these? You can purchase these from any broker that will allow you to trade ETFs or mutual funds. Number 7 is going to be rental housing. Not for everybody. This option is not for everybody. If you have the ability to manage tenants, or if you would like to hire a property manager to manage those tenants, this can be a great investment for this year. Renting out housing can be a great investment. If you don't want to manage the property yourself, you can hire a property manager. You can do quite well if you make the right purchase in the right location. Who is this investment good for? It's good for someone who wants regular cash coming in, and for someone who wants to manage property or have someone else manage the property. The risk is that you're hands-on. You're not passive like the stock market, like buying an S&P 500 index fund. That's passive. But you're actually hands-on working because you have to manage the property, or you have to work with the property manager who is managing the property. And especially if you're managing the property, you're gonna possibly be getting calls at different times of the night that something isn't working, something is broken, and you have to answer those calls. So it's active, very, very active. Whether you hire someone or not, you're still gonna be having a little bit more activity. Rewards for rental housing is that as rates are falling in 2024, this may be a perfect opportunity for you to get in. Now, depending on which way the economy goes, it may make it a little bit more difficult for you to actually run this type of business. The key here is that you have to hold your assets for a longer period of time to weigh out and see how the economy performs. Where do you get rental housing? Well, you'll have to work with a real estate broker to find rental housing. As you decide which of these investments is best for you this year, you'll have to consider some of the factors that we discussed early in the video. You'll have to determine your risk tolerance. Also, how much time you have, as well as your knowledge of investing. I mentioned some intermediate investing, advanced investing, and beginner-friendly investing. So you'll have to understand what your knowledge is of those things as well. And of course, you'll have to assess your personal budget and your personal financial situation at this time. There's usually a trade-off between risk and reward when it comes to investing. So you'll have to understand what that trade-off looks like for you. You can take the low-risk option that offers a little bit more modest returns, or you could take the higher risk option, which will give you higher returns, or you can take a more balanced approach. This way, you're being safer about your investments so that you can have more long-term growth. The good thing about this list from Bankrate.com is that it offers lower risk and higher risk options, while also allowing you to diversify and think more long-term. For more videos like this, subscribe to my channel, and thank you for watching, and I'll see you in another video.